Personal finance practice problem using Excel. Budget for 12 months. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab in essence being an answer key. Information's on the left-hand side. We're going to populate that into the blue area on the right-hand side. We have our financial data, which we in essence use to create our financial statement of the income statement, which is typically what we'll be focusing in on as the starting point, the starting ground to be constructing our budget. And we're going to be looking at a 12-month budget, which is common to be looking out basically at a 12-month time period because that's still relatively short term that you can kind of project out into the future for, possibly then adjusting these things as you go as actually time passes. So we have, in essence, our income statement. That's going to be our starting point as we construct the budget. Note that the budget, the balance sheet then, is where you'll stand at the end of the budget process. So when you're thinking about the income statement, that's going to be your change from one period to the next to get to the next period, which is where you would then stand after that performance had happened at the next balance sheet line item. Now, when we think about the budgeting process, then we want to think about how are we going to have changes that are going to happen into the future. Usually we'll look at the past as a kind of baseline and then make some considerations about what we expect to happen. Here we're going to expect then the wages are going to be increasing by 5%, which might not be the case on a monthly basis. Of course, if you're a W-2 employee, you might have kind of average income that you might hope to have at some certain point in time. But if you're a sole proprietorship or something like that, or if you have hourly wages, then it's possible that you have that increase. So we want to assume the increase that we're going to be having. Then you want to kind of break out your income statement and start to think about what's going to happen in the future with it. So we've got our income, we've got the fixed outflows. Now we put these up here in the fixed category because we expect them to be somewhat standardized. We expect ourselves not to have much control over them. So those will be easy for us to budget because they'll just be the same number. The rent is what it is, and so on and so forth. We're going to say the same for our credit card payment and the car insurance we're going to get from our data down below here. Note that we're going to kind of deviate from a standard month-by-month payment with the car insurance, and that also points out to the fact that when you're doing your budgeting, you might have an accrual kind of concept for budgeting, and you still have that accrual and cash kind of problem. We'll try to emphasize that a little bit more with the insurance here, our budget in essence being on a cash basis. Then we got the variable expenses. Food, that's something that might vary, meaning you might spend more on food as your income goes up. Clothing, you might spend more as your income goes up. Utilities, you might have a baseline for something like the electricity that might then change. So for example, we might say the electricity is going to be higher, 10% higher, possibly by season, because you might be using air conditioning or something like that. And there might be a baseline that you have, so it won't be completely variable. Water, you might have a variable component. It might be fairly stable. That might be something that's closer to kind of like a fixed cost over time, at least from a budget perspective. Utilities and cable, so that might be, your cable might be fairly fixed if you're committed to using it. You know, if you're paying it, it is what it is. Your auto expense, that's something that could vary over time. If you drive for your entertainment purposes, as your income goes up, it may go up. And then your entertainment possibly could go up as your income goes up. So what we're going to do is then let's take a little comparison of our expenses down here compared to our income. And our idea would be that they might go up. These expenses may then go up in relation to the income. So what we're going to do is we're going to say this is going to be equal to the 210 divided by the income, the 2060, and enter. So, and this is already formatted in a percent format, adding a couple decimals. And then I'm going to do that a couple more times, and then we'll copy it down. So this equals the 220 divided by our income. So it's 10.68% of the income. This is the 130 divided by the income. This time, that second one, the E2, I'm going to make an absolute reference so we can copy it down by selecting F4 on the keyboard, $ before the E and 2, then enter, then put our cursor back on it, and we can then autofill this on down the whole way, giving us our nice percentages, which might be useful to think about our budget from. So we can use those percentages to say, okay, if there's changes in the income, then I might have relative changes in how much I spend on, say, food, for example. So now let's construct our budget. I'm going to have the same kind of outline of the income statement. So this is going to be nice and easy to fill out. I like doing it with a formula. This equals our income statement tab to the left. And then I'm just going to autofill that all the way down. I'm going to take that fill handle, drag it all the way down. And so there we have it. And that should take us down to the bottom. These last two we'll deal with in a little bit here. And then you could copy the formatting, although that'll take away the blue. But I want to do this indentation. I want that indentation. So I'm going to select this entire thing. And then I'm going to go to the Home tab, Clipboard, hit that little Format Painter. And then I'll just paint this whole thing using that same format, which gives us that nice indentation. I'd like to get the blue back. So to get the blue back, I'm going to right click on it. I'm going to hit the bucket. If that blue isn't right there, you can go to this little more thing and then go to the standard, and the blue is right there. That's the one we want, that blue right there. And then OK. So there we have that. So I'm going to start off with January, assuming we're going to have January be the same as it was in our last period. So I'm just going to pick this up, imagining we're getting this from last period, like December of the prior period, and then we'll continue on from there with our increase in the wages, which will assume a 5% increase. So I'm going to start off with just the same starting point, the 2060. I'm going to bring that down here. I'm just going to say this is going to equal the rent, the 320. This will equal the 65. And then the insurance down here, I'm going to say that the insurance is paid, the car insurance, on January and July. So notice the insurance, I'm going to say that we pay every 6 months, meaning I don't pay the insurance monthly anymore. So on a cash flow basis, I'd have to figure that out when they actually happen. And when I think about basically an accrual basis, from an accrual basis, you got to think, well, it's not that January I did worse than February in this case. It's just that I paid 6 months worth of car insurance in January, and February I paid in January. So that's one of the accrual kind of ideas that you got to be careful with. We're going to be on a cash basis. And so I'm going to say that we're going to take this 1,100 and pay it in January. So we'll pay it in January, and then the next one is paid in July. We're going to say, all right. So we'll underline that. We'll go up to the font group and underline, and then we'll sum that up equals the SUM, Shift 9 up, holding down Shift and summing that up. We get that 1,485, and then we'll pick up the same information for the first month, which I'm going to pick up the 210. Now notice when I think about the budget down here, I might then want to get to these numbers. I'll test it out by taking them as a percent of the monthly income, so that I can start thinking about my budget on the variable side of things as possibly changing with relation to income. So as my income goes up, then I might want to spend more on like food and things like that. So that's one way I might try to tie this out. So I might say this is going to be equal to, I'm going to pick up this number, the 2060 times the 10.19. That should give me the 210. And that'll be a concept that we'll use going forward. So just to get an idea of it here, we're going to say there's the 210. This will be equal to the 2060 times the 10.68. And we can copy this down, which we'll do. Let's do it 2 more times. This will equal the 2060 times the 6.31. And 1 more time, this will equal the 2060 times the 3.16, but this time let's make that an absolute reference, selecting F4 on the keyboard, $ before the F and 13, so that we can copy it down. And this cell, actually the I cell should be, let's do that again. That's going to be this one. This first one, the 2060, I don't want that one to move that down, so I'm going to select F4, $ before the I and 2. So when I copy it down, that one will not move down. You only need a mixed reference, but an absolute reference works. Then we'll put our cursor on the fill handle and drag that down. Double check it and say, yeah, that one looks like it's doing what we want. I'm going to then go to the font group, underline, and sum these up equals the SUM of those items. So there we have that. And then we're going to say that we have the total cash outflows, which will be equal to the fixed outflows and the variable outflows. So we're at the 2,605. So the net income, in essence, is going to be the 2,060 minus those outflows. Let's just call that net. Let's call that net income. I'll change this over here, just simply net income. So we'll call that net income on that, and that's going to be negative font group underline, and we have a negative amount there. So we had more outflow than the inflow in January, and that's due to, by the way, the car insurance issue up top. And then we might then tie this into the balance sheet. And the way you tie this into the balance sheet is the difference might be the impact on your cash, right? So then I could say, okay, well, the beginning cash amount, let's say the beginning cash amount was, where did I put the beginning cash amount up top? This 1,600. So if that's my beginning cash amount and I have a net decrease over here on a cash flow basis, my ending cash would then be the sum of those two equals the sum, which will be a subtraction of the 545 negative subtraction minus the 16. So we have ending cash of that 1055. Let's put an underline here. And so there we have it. So now let's do this again for February. So on February, I'm going to say, okay, we're going to pretend that income goes up by 5%. So to calculate that, I can say this is the prior number times, and then I'm going to put brackets around this because I want to take 1 or 100% plus the 5%. And that'll allow me to use this cell and increase it by 105% to get to the 2,163. So then the rent's going to be the same. The credit card's going to be the same because these are going to be fixed in nature. This one is going to be 0 this time because we're only paying the insurance on January and July because we pay it every 6 months. And then we're going to say font group and underline and sum this up equals the SUM of these three. Now this one makes February look a lot lower on the fixed cost because of that accrual cash difference, paying 6 months of insurance in essence in January, therefore none in February. So you want to keep that in mind when you're planning, but we're going to have a cash flow basis here. Then on the food, we could do the same kind of thing now, meaning I'm going to say that we're still going to try to spend 10.19% on food, but I can spend a little bit more even at that same ratio given the fact that my income has gone up by the 5%, right? So we could say, all right, let's take that 2,163 times the 10.19. Let's try that here. I could say the same for the clothing. I'm going to spend a little bit more on clothes, the 2,163 times the 10.68. And then we had the same thing with the utilities here. Now it actually said the utilities, I put something down here saying that it's going to be higher from November to March. So we can assume, and this last one was probably in December. So we're probably in the higher months here through March, and then maybe we'll decrease it later. So I'm going to say let's keep the same amount. We're going to say this is going to be this times the utilities, which we're going to pick up at that 6.31. So it's still, I'm going to make it increase a little bit more, and then it's going to have more of an increase or decrease when we get past March apparently. And then the water. Now the water, you might assume the water to be somewhat fixed, right? Am I going to vary my use of the water, as my income goes up? Am I going to use more hot water? I don't know. I'm probably going to say that's the same. The cable, that also might be something where you say, the cable's pretty much the same from month to month because it's the same bill. Even if my income goes up, I'm probably going to consume the same cable. They may be considered more kind of like fixed costs up top. The auto expense, that's something I might increase as my income goes up with basically. So I'm going to take that 2,163 times the 10.68. And then the entertainment could certainly go up as my income goes up. So it's going to be this times, I'll try to keep the same percent, the 7.28. And then we'll go, okay, font group and under. So that's one way you can kind of consider this. Let's go ahead and sum this up equals the sum. And pick that up, and then the total outflow, I can copy this across now. I should be able to copy that across which is going to be that, and then the net income, I should be able to copy that across. Now we've got a gain income because we don't have that, we don't have the insurance cost happening this time. My cash is going to be, there's my ending cash last time, which is my beginning cash of this time, and I could sum that up. So there's my new cash balance, which I would expect on the balance sheet. So let's do it again. We could say, okay, then February, it's going to go up. I'm going to say this is going to be this number times, and we're going to increase it by, let's put brackets, times, we're going to say 100% or 1 plus the 5%. So times 105%. That brings it to the 2271. The rent, I'm going to imagine, is the same. Credit cards, the same. We're not going to be paying any insurance until we get to the next payment for the insurance. So we'll sum up the fixed costs as the same. Underline the 0, font group underline. And then we'll do the same concept here. I'm going to take the 2271 has now increased times that 10.19. And I'm going to try to make this first one, that 2271, absolute by selecting F4 on the keyboard, making it an absolute reference. So when I copy it down, I'll use that same concept all the way down. So it'll increase in proportion to my income increasing. Copy that down. I'm going to copy it all the way down first. And so we have that same concept. And then these two we said were kind of the exception. I'm going to say this is going to be the same. Cable's going to be the same. So I'll keep those two the same. Let's kind of make those yellow. We should have put those up possibly as fixed kind of costs. So those are those, and let's underline it here, and then we'll kind of continue the process. Equals the sum of these, and then this is the cash outflow. I can copy these two across, selecting them, putting my cursor on the fill handle, dragging to the left, double click, that looks right, double click, that looks like it's doing what we should. And then the beginning balance is going to be the last time's ending balance. And so there we got, and so now the new balance is going to be the income plus that amount. So that's now our cash balance now. So we're going to go font group underline. Let's see if we can do this a little bit. We're going to use some copy, and I'm going to try to copy the income increase all the way over this time. So this is going to be equal to the prior amount. I'm going to say times shift. It's going to be 1 plus. I'm going to pull over that 5%, but I don't want it to move now, that 5%. I want it to stay the same. So when I copy it to the right, I want it to stay the same. So I'm going to select F4 on the keyboard, close up the brackets, $sign before the B and 1, enter. And then I'm going to copy that all the way out to December. So I have my increase that's going to be the same through December. And then we're going to go down here and see if I can kind of standardize this. This is going to be the same number, the 320. I'm going to copy that down because I just copied the cell to the left of it. Down, underline here, font group underline. I'm going to copy this one to the right, copying this one to the right. And then we're going to say same concept here, which is going to be this number up top. I'm going to select F4 on the keyboard times this number, no F4, not absolute, enter, copy that down. Going to copy that down. Double check this one, double clicking on it, looks good. These two I'm going to fix by saying this is just going to be the same. This is going to be the same as the prior one. And there we go. Let's go ahead and underline equals the sum of these three. And there's the 1, 2. Now we're in April, so we have this other thing. This utility was slightly different. We wanted it to be 10% less here because we're assuming it was higher by 10%. So we're gonna let's say try to reduce it by 10%. So now let's kind of adjust this utility one, which is now going to be equal to, we'll say this number times, and I'm going to say brackets. I'm going to try to pick up this number minus, or let's say, and then we're going to say brackets, and then I'll say this number again times 10%. I know that's a kind of a complex formula. Here we said it was going to go down by the, where's that 10%? There it is, 10%. And close that up. See if that did what we wanted, because you would assume that we would be taking, let's take out the trusty calculator. So we would be taking normally the 2385 times the 0.0631, which would give us that. And then I'm going to take 90% of that because it went down, we're saying, by 10. And that would give us, that 135. So I know that's kind of a complex calculation, but it should be, that's going to be the idea with the utilities. And then we can copy this across. Let's copy this across. I'll try to speed things up here for time purposes. Prior balance, underlining, font group underline, and then we'll sum this up, which we could just copy this one across. Okay, so let's see if we can copy some more of these across. This one I can just copy across. These should be the same all the way through except for that one change in the insurance. So I'm just going to put my cursor on here, drag it all the way to December. And so that should be the same except for we paid in July. That's when we're going to have to pay the auto insurance again. So in July, this is going to be equal to the auto insurance, which is another 1100. So that should be good there. And then these we can copy down. This is going to be equal to this F4 times, we're going to say this, copy that down. I'm going to copy that down. And then I'm going to fix this one and this one. And this one, I'm going to leave it blank for now. I'll come back in and adjust that one later. Let's go ahead and copy these across, formatting these, and copy that across, like so. So that looks right, that looks good. And then this is going to be the prior balance, underline, and then we can copy that across. All right, so let's see if we could do these more quickly. I'm going to say, let's take this number, F4, and then say times this number. And I'm going to do that all the way across. I have to do this kind of manually because I need the absolute reference. I'm going to take this number. I'm going to select F4 and then times this number. And then I'm going to take this will be equal this number times, or let's say F4. Do it again. This number, F4 times this number, tab, this equals this number, times, or hold on a sec, before times, you need an F4, and then times this number, tab, and then this is going to be this number, F4, times this number, tab, and this will equal this number, F4, times this number, tab, and one more time, this will equal this number, F4, times this number, and enter. Now we can copy that whole thing down by selecting this whole range, putting my cursor on the fill handle, dragging it down. So there we have that. Now these, I'm going to assume they're going to be constant, so I'm going to take these two cells, drag them to the right. So we have that. And then this one's our funny one. Is there any way I can make an absolute reference for this funny cell? This is going to be the one above it times F. So that number, I want to be absolute reference, F4. F4, and then this one is F4, and then this one is B times B20, which is another F4. So I'm going to solidify all that so it doesn't move, this percent and that percent in essence in this formula. And then I should be able to copy that one across like so, copying it across, boom. So hopefully that calculated properly. I won't get into too much detail because I've gotta continue on here. We're running short on time. Let's sum it up. Sum it up, the totals. The sum this way. And then I'm just going to enter that sum all the way down. Let's enter it down to here. Now, typically I like to kind of sum up vertically, so I'll usually add it up then vertically, summing this way. But you might want to double check it by also summing up this way, just to give a double check, because you should come up to the same number. And then you could do the same here, equals the sum of January through December. Copy it down this way using the autofill. Like so. It's like down to here. Let's underline all these. Underline all these. Sum it up then this way equals the sum of these, which you could double check by having the sum this way to January. And then this one I'll typically copy across this way. Now, hold on a second. This one is the total outflow. So the total outflow should be equal to this plus that, or the sum of these. So note that double check kind of catches a problem. And the problem is here, I dragged this down one too many cells. So I'm gonna delete this whole thing. And let's do it this way. This one is right. Let's copy that across. Autofill that all the way across. And then we've got the 29 this way. And then we should be able to pick it up this way. It's still different, so... And that's because this cell is different. So let's try to just copy this formula all the way across again. This should sum up this way. I'm just going to copy that autofill all the way across to here. And then everything should tie out this way and that way. Okay. And then we've got this one, which is subtracting the two. So let's go ahead and copy that across. That should be good. And then this one is always going to be the prior balance. This one's a little bit tricky because it has that stagger problem. I can copy that across. It'll always be 0, but then it'll fix itself once we do the sum function here. So then I'm going to sum this up, summing these two. And that, see how that populates this cell, which is now right. So if I copy this across, then it should do that all the way across. And there we are. So there we have that. Let's put an underline here. We can put an underline here, so that looks good. So I know I did that last part a little bit quickly here, but yeah, we could sum this across this way just for a double check number. Summing that this way to double check that number. We could sum this way to double check that number. And we could, hold on, we can't, no we can't, no we can't. We could sum this. And we can't do that. That's the ending. Those are the balance sheet accounts. So no, we can't do that. Let's go ahead and then format these, making them bordered and yellow or blue. And let's do that here. Blue, bordered. Okay, so that's the whole thing. We got the 5%, the 10% decrease in the insurance. So I know I did that fairly quickly towards the end. So hopefully you can kind of bounce back and forth if you want to spend some more time on this with the example tab to see how it's basically put together. Hopefully I got everything in there properly. And then of course you can kind of see where your cash flows. Notice we do have some negative cash flows here in terms of your expenses or outflows being greater than your inflows, but you should have then enough cash to fix it. Also, I put this 1,600, that's not right. Let's delete this. There we go, because that insurance was only happening up to that point. That gets us our ending balance number at the 19,705 in terms of the checking account.